So economic theory talks about new competition coming in. Okay, and then you might have a company with competitive advantage. That's great. The phenomenon that we've seen over the past decade or two is something even more challenging to economic theory, which is companies that have a competitive advantage but can reinvest within their competitive advantage. And this is quite interesting because you really don't see this economically much at all. So, for example, Sydney Airport might have competitive advantage because it's got Sydney's major airport, but it can't open up 2 or 3 other Sydney's major airports. It's got competitive advantage, but only within that asset. Software businesses are able to have that competitive advantage, but then grow their footprint as well. And that means that they are compounding their economic value, and that phenomenon we call network effects. So when you see this network effect, where the bigger you get, the more attractive you become to your customers, and therefore you get bigger again, and you become more entrenched. The market has wised up to this in the past decade and started to put a much higher valuation on these businesses. Now, the PEs optically look really high for these sorts of software businesses. To some extent, that's fully justified by the fact that they're going to generate high returns off of an expanding asset base into the future, so large returns. So if you were to do a discounted cash flow valuation and then bring it back to the future, these companies are going to be worth so much in the future that it comes back to today as a high PE. So in a lot of cases, the underlying economics of these asset-light, high-returning businesses justify a high PE today. Recently, we've also seen an expansion in those PEs as more investors become aware of how much these businesses can grow in the future. If you go back a couple of years, we were looking at these software businesses, and once we ran the forward estimates of what little they had to reinvest and what strong cash flows they could get in the future, we were getting valuations that were well ahead of the price that the market was asking for these stocks. So owning a lot of these businesses was pretty obvious to us. I think a couple of things have changed in recent years. One is, more investors have been understanding these economics, understanding the concept of network effects, winner take all, and the real explosion in value that some of these businesses can deliver. But I think also we've had a lot of money crowding into the top end of the US market, which has been dominated by the FANG stocks. And that means that there's been a lot of expansion of valuations of those stocks. Partly by more passive investors, and really pushing those on a less valuation sensitive approach to buying these stocks. So whereas, a couple of years, 5 years ago, you might have said that the market was underappreciating these businesses, in most cases, it swung all the way around to the market, very richly valuing these businesses. Once you get a company that's on a very full valuation relative to what it underlying is worth, there's less margin of safety. And more risk of any kind of a price drawdown just from the market having a wobble of some sort. So these businesses are still, for the most part, great businesses in terms of whether they're great stocks. The higher the valuations go, the more you say, well, on a price to value basis, I don't need to own quite as much of that. So towards the end of last year, we halved our position in WiseTech. Still, love the business and everything about it. It was just the valuation that we were less excited about at that point. So still very happy to hold that name for the longer term, especially now that valuation has come back to what we think is a more reasonable level. So, part of active portfolio management is understanding these businesses, understanding what they're worth, and then managing the portfolio to make sure you've got the right exposure for every individual name, given where the price is trading relative to its value.